Hello, so long time since I did a video, so I thought it was fitting to drag out the webcam and the microphone and make another one today. So I'm looking at oil and I'm checking out the futures right now, and it looks like we're going to, well, it looks like oil is currently, well, pretty much crashing. It's down 1.1% and the market hasn't even opened in America yet. So I want to actually take a look at some key support and resistance levels and see what is going on. So all you need to do, pretty simple. Most people just say, okay, so I will just arbitrarily say this is an important top, then I'll arbitrarily say this is an important top, and we'll just call that support and resistance. But you know, that doesn't work that much, or it's not exact enough. You might get some specific areas, but you don't want to just say, here's a support, here's a resistance level. You want to say, how strong is this level going to be? So this is what we can do. We take a Fibonacci retracement tool, go from the very top, and we're going to draw it down to the next major bottom, which is right here, or the next minor bottom. So we have this one right here. You notice that I put in the retracements for the 61.8, the 50%, and the 38.2. Honestly, they're the only ones that are actually important when you're dealing with retracements. So I did that. Now I'm going to do the same thing from the top, and I'm going to go to the next bottom right here. Alright, so went from top to bottom on that one, top to bottom on this one. I'm going to change the color. So let's make this one blue. And now one more time, and this one's going to be the most important retracement bracket. I'm going to go top to bottom for the entire movement, so which takes me to about right. Alright, so I'm going to make this one the color yellow. And we're going to take a look at it. Well, let's see. What we want to look for is places where we have these lines overlapping. So we see that, like this level right here, we have a blue line, we have a red line, both overlapping. So we expected that to be some kind of support level. And honestly, it looked like the market plowed right through it, and it's actually using it as resistance now. So we go to the next level. So where's the next one that things are overlapping? Well, we see a yellow line right here sitting around 91.73 on crude futures. So that's the yellow one. Then the blue line, we have one sitting at around 92.07, and then we have a red line sitting just about at 92. So this entire area right here, we have three lines overlapping. This is going to be an extremely strong support point. So I'm going to make this a different color, make this entire thing yellow. So this entire level right here is a very strong support point, and you see right here that we were pretty much calling it last week, but it used this level to bounce off of. Now it looks like we are going right back into that zone, so we might as well do an exercise and just see where the next level of support would be after that. It's that there's really not much overlap area. Like the next overlap area for crude oil is sitting all the way down here at around $86. So if you're long crude right now and we see a breakage below like the 90, let's just say 91.50, just as a stop level. If we see a breakage below there and a close, which we haven't seen a close there yet, then yeah, it's probably a good idea to maybe cut your losses on there. Now if I take a look at the RSI, we see that we're just hitting this 40 level right here, which generally acts as support in a bull move. So we have not necessarily broken yet, but if we do go much lower, the RSI will give us a sell signal, and also our Fibonacci brackets basically say that there's nothing to support this, or very little, until we hit the 86, 87 range. Alright, so that's just some ramblings about oil. Let's actually go out into a longer time frame. So now I'm sitting out here on the 5-year chart using a weekly chart looking at actual cycles, and what we see here is that we have pretty well defined, let's see how many weeks this is. We have a pretty well defined cycle that is lasting about 36 weeks. So we're looking at about 3/4 of a year. And we're seeing that there is positive bias once these cycles bottom. So the last cycle bottom was in around June. So what we're seeing right now is that we are getting close to the peak, and then we would generally expect some deceleration into the last part of the cycle, which would put us in about February. So this is just on a pretty much detrended basis, but you see right here, these troughs, they almost always coincide with some sort of bottom in the oil market. And it even goes back into the 2008 bottom. Now, the only time that we got a miss was back in early 2008 when oil was going off to the races. But this basically says that we still have some room to the upside going for oil. So it's not necessarily the time to abandon your long positions yet. One other thing that I could do is, so now I'm actually looking into something else, which I want to do a little bit of studying on market profile. So right now I'm looking at, well, let's just jump into a pretty short-term chart right here. And what we see is we essentially see like this straight line move, and we can tell that very few volume was traded here. But then we also see a large amount of volume right here. So what this is giving us is it's giving us an undeveloped price area between about $94 and $95. So if we can just do like a mean reversion trade, and let's just say if this support level holds, and like, look, even on the 30-minute time frame, you see that we have pretty much like a bimodal distribution right here. So very little volume was traded right here, and we're sitting a little bit below the value area. So we would generally expect the market to fill in this point. And if you're a short-term trader, you might like that kind of thing. So like, let's go to a 1-hour chart. Okay, so you see that we're trying to almost form like somewhat of a bell curve. So if we jump into here, we would expect to see a complete bell curve, and instead we're seeing like it looks like Head and Shoulders that's turned upside down. So we do that on a 1-hour chart, even like on a 4-hour chart. Let's see. Okay, this is where it starts to actually look like a real price chart now. So are we seeing any underdeveloped areas here? No, not really. Like, let's see on the daily chart if we see any underdeveloped areas. Well, now we're actually saying that this lower area is underdeveloped. So in the longer term, we might be able to expect some more congestion or some future moves down here. But in this like short-term area, like the 1-hour chart, we just see this area right here that says that oil should go, it should go back up. So that's my thoughts on oil for the day. Like I said, we're sitting right at support right now. We're sitting at 91, 93, and it's, let's see, 10, 11 p.m. on Sunday night. So don't get out of your longs yet, but keep your stops tight. All right, happy trading.